Julian Callow with us from Barclays Capital. Julian, good morning. Your response when you saw this coordinated action today by the ECB and the Fed?
Well, for me, it's not such a surprise, and I think we should note as well that the first of these operations to supply term dollar liquidity will actually be undertaken in October. So I think the message that the central banks are trying to send here is, look, it's not some kind of crisis situation here, but we just want to have this facility around, particularly as we go through the turn of the year, in order that if any banks need to be able to access term dollar liquidity, they do have that option. Now, we've got to bear in mind that the Fed has had these long-standing dollar swap arrangements with other central banks. So really, it was not so hard just to reinstate the system that we had back in 08 and 09 for this. We'd already had a one-week facility that the ECB had set up, 1 week of dollar liquidity. That was being accessed very, very little, only by one or at most two banks. But now, of course, there have been greater concerns emerging in the market. So central banks do what central banks do. That is to provide liquidity.
They do what they do, but this seems to be a less Bundesbank-y ECB. Will the ECB of Draghi be significantly different in tone from the ECB of Trichet?
I think, look, Draghi is in a very interesting position because the entire ECB board is actually rotating within a period of 24 months. So Draghi has a lot of opportunity here to shape the ECB's strategy, the way it interprets the economic and financial news in the way he would like to see it. So on the one hand, he has a lot of discretion, but on the other hand, you can be sure that the German media will be only too keen to seize on him if he looks like he's going soft. So he's got a very, very challenging course to follow, just like Trichet, in fact, has had done it. And Trichet has earned the respect very clearly and has really stepped up in a very great way to the crisis that we've had. And I think Draghi can do that as well. And maybe we will see a slightly different ECB strategy and ECB reaction function develop. For sure, Draghi is going to have his work cut out if what we see is anything to go by.
Let's look at the polarity here. We're going to have Julian with us for an extended amount on this historic day. The yellow line is Greece GDP. The white line is German GDP, normalized back to the peak 2008, where everything is unraveled. And that is this dysfunctional European Union, stealing a phrase from Catherine Mann up at Brandeis University. Julian Callow, how dysfunctional is the middle ground of Europe? We talk about Greece and Germany. What is the difference between France and Poland, for instance?
Okay, well, the French economy has tended always, I would say, so far, if anything, to surprise a little bit on the upside. It tends to be a bit better than you think it should do. But one of the factors behind that is that the French have been running with quite a large budget deficit. It's still actually smaller than that we have in the UK, but they really are going to have to tackle that very large budget deficit. Now, in the case of Poland, the economy has held up much better so far. I think it's got much lower labour costs. It's a large economy. The policies that they've had in place there have been successful, and it's not been so far really contaminated by some of these big problems that have been arising in the case of the euro area.
I want to bring up right now, bring up the chart here, chart 7 if you would, the German bond. We look at the U.S. market. Here is the German 10-year, and it just goes down and down and down. Julian Callow, off Reinhardt and Reinhardt, is there financial repression for savers in Germany?
I guess you could look at it that way, yes. I mean, clearly, the way I look at it is that money is going into German debt here and into UK debt as well because they are considered safe havens. The problem investors have got at the moment with Italy and with Spain is that they just don't know if they're getting a good risk-adjusted return on their money at these kind of yields. You know, of course, the problem with a fiscal sustainability is that if it goes wrong, it goes very badly wrong if you're a bondholder, and then you require a lot more premium protection.
Right.
And investors can't really make up their mind how much of a danger there is there. I mean, ultimately, we think the governments are going to do the right thing here and get this under control. But you know, Tom, the way governments work, they don't lead by good example here. Look how Italy has prevaricated, and it's had very tortuous debate.
Well,
it seems like the markets have to keep the pressure up on the governments,
yes, that was my question.
really to get anywhere.
That was my question exactly, Julian. It's almost the markets telling the elites and telling the plutocracy, if you will, what to do. How will the markets respond to this announcement today? What will the markets tell the elites in the next 2 or 3 weeks?
I think what the markets want is a clear roadmap for the future of the Eurozone. That is precisely what they are not getting at the moment. They need to see Berlin and Paris lead the way and say, by 2015, we aim at a fiscal union for the euro area. We are going to set up an immediate intergovernmental conference where we will orchestrate attempts to achieve that aim. Once we have that, then the ECB and the EFSF and other players like the IMF can set a bridge to get there.
Right.
And this will cool down the market's concern.
Quick chart here, shared sacrifice. Alan Greenspan told me that. Here's Euro Swiss. Look over on the right side of the chart, Victor. You can see that little flat line. That's that Euro Swiss peg announced a few weeks ago. Julian, why is Switzerland pegging if they're part of a coordinated dollar response?
Okay, look, I think really, Tom, this should be considered purely in Swiss terms. The Swiss franc has appreciated so strongly here. The Swiss economy, of course, it has a large financial sector, but it also has a very successful exporting sector. But that is starting to get hurt very hard by this very, very rapid appreciation in the value of the Swiss currency. So they felt they had to do something. But of course, we don't know how long it's going to last for. We don't know how well it's going to survive.
Right.
But it is clearly a very inflationary method here, because the SNB is now having to inflate its balance sheet very sharply.
Yeah, it's something to watch for. Julian Callow, valuable today.